Hello, hello. All right. Well, welcome everybody to VAP's weekly meetup. Today we are going to be talking about a little bit about crypto taxes and the benefits of donating cryptocurrency to 501c3 nonprofits. We will get into the weeds of all of that, but first, just a quick round of introductions. My name is Cameron Dennis, of the Blockchain Acceleration Foundation. We're a 501c3 nonprofit that starts accredited blockchain classes at universities. We run research, we build projects, we get people jobs in this space, essentially everything to accelerate blockchain education and adoption. I'm here with Alex Wilson from the Giving Block and Robert Musiala Jr. from the Baker HODLers. And Alex, would you mind just introducing yourself real quick?
Yeah, sure. Thanks for having me on, Cameron. So I'm Alex Wilson. I'm one of the co-founders of the Giving Block. And in short, we make it really easy for nonprofits to accept cryptocurrency donations and for donors to support their favorite cause in a more tax-efficient way.
Awesome. And Robert, would you mind introducing yourself real quick and a little bit about Baker HODLers and your role there?
Hi, everybody. Robert Musiala. I'm counsel at Baker HODLers. Baker HODLers is a national law firm, one of the largest firms in the U.S. With offices in 16 cities. My role at Baker HODLers is I co-lead our firm's blockchain legal practice. I've been working in the blockchain space since 2012, so I kind of fell into it early days. At that time, I was an investigator at PwC, and I had an investigation that ran into Bitcoin and realized there was a whole technology behind this, and helped to launch PwC's blockchain practice, and then joined Baker in 2018 to launch our firm's blockchain legal practice. I was telling Cameron earlier that we see blockchain as sort of an adjunct legal practice because no legal issue is just blockchain. It's always blockchain plus two or more traditional practice areas combined. So a big part of my role is bringing together the right attorneys from across the firm for issues, whether it has to do with tax, securities, anti-money laundering, intellectual property, you name it. And so I know quite a bit about how blockchain affects a lot of different areas of the law, and then I have a team of deep experts that I bring to the table when I need to for different client matters. That's a little bit about me.
Amazing. Well, it's a pleasure to have both of you here. Just to be super crystal clear with everyone, nothing in this meetup should be taken as tax or legal advice. Although we have a lawyer here, still not tax or legal advice. We just want to be crystal clear about that. And actually, before sort of getting into why it's beneficial to donate cryptocurrency to nonprofits, Alex, can you just tell us a little bit more about the Giving Block and why you started it to begin with?
Yeah, sure. So before starting the Giving Block, I was kind of your more traditional management consultant, working with Fortune 500 companies on emerging tech. And as you can imagine, in 2016 and 2017, everyone's favorite buzzword was blockchain. Except there wasn't a whole lot going on in enterprise blockchain. The companies just like to talk about it. So kind of at that same time, I got into trading cryptocurrencies, rode the 2017 sort of hype wave, and noticed that a lot of people were looking for different ways to offset their capital gains taxes in the bull run. And one of those ways was by donating their crypto to nonprofits, except that most nonprofits had no clue how to accept crypto donations. In most cases, the donor was having to actually teach the nonprofit how to open a crypto wallet to accept the donation, which wasn't a great process for either side. And a good friend of mine from college, who was also living in Washington, D.C., just happened to be working at a nonprofit. And basically, we pitched his boss on, hey, do you want to kind of be like our first client or our pilot client and help us, build the first easy way to accept crypto donations? Spent a year with them, learning what nonprofits were looking for in a product like this. And then really just about a year ago, launched the company more publicly. And, now we work with about 120 different nonprofits all around the world.
That's amazing. Super, super cool. Can you tell us a little bit more about the Block Shop too? Is that the nonprofit that you guys your co-founder was working at, or is that something else?
No, that's unrelated. So that's a blockchain co-working space in Washington, D.C. that we run. So we ironically were looking for a centralized place to go to blockchain related events in the area. but got kind of tired of the random meetups at bars and things like that, and thought, why not kind of bring the community all together in one place. We've got about 20 different entrepreneurs working out of there, the DC area. Before COVID, we were doing almost weekly blockchain-related events. Now that's a little bit different, but hopefully, this spring or in the summer, we can start that back up again.
Amazing. Yeah, I can imagine the crypto world in DC might be pretty interesting with a lot of regulators and politicians and whatnot. Is that you come across regulators and politicians interested in this space, like actively seeking, I guess a community, or is it you guys have to do a lot of the outreach then?
They're really interested in meeting with local startups to kind of get their perspective. And there's been plenty of interesting meetings that we've had between, let's say, people from the SEC and the CFTC and, blockchain developers. As you can imagine, their views on things tend to be pretty different. But it's nice to kind of bring everyone together and have them in the same room for some open dialogue.
Yeah, super interesting. Speaking to, I guess, frameworks and how, governments view cryptocurrency, Robert, can you tell us a little bit more about how the IRS is approaching, crypto regulation and some of the guidance that they've given thus far?
Sure. I want to start though by first just giving kind of the broad overview for folks about how cryptocurrencies are regulated in the U.S. And it's quite complex, really. We have 4 agencies in the U.S. that are each regulating cryptocurrencies in really under 4 different legal frameworks. So you have the SEC, which is enforcing the securities laws. You have the CFTC, which is enforcing the Commodities Futures Trading Commission regulations. You have FinCEN, the Financial Crimes Enforcement Network, which enforces laws related to anti-money laundering. And then finally, the 4th, the IRS, which we're talking about today, which of course is enforcing the tax laws. The IRS has been very active and especially has gotten more active in the last 2-3 years in particular. But to give just a kind of a high level overview of how the IRS has been acting in treating cryptocurrencies, it began in 2014 when the IRS published a notice essentially saying that cryptocurrencies are going to be treated like property from a tax standpoint. So that means just like any other property, when you buy or sell or have what's called a conversion event, you have to recognize gain or loss and keep track of your basis, which was the cost when you purchased or acquired the property, and then use that basis to calculate a gain or loss, upon disposition of that property. And so that's kind of the heart of where a lot of the tax issues come from. In about 2016, the IRS started getting really interested in enforcing the tax laws against folks who may have been trying to evade their taxes using cryptocurrencies. So the big event in 2016 was the IRS issued what's called a John Doe summons against Coinbase, one of the largest U.S. exchanges, where they were trying to essentially just get any and all information that they could from Coinbase about Coinbase users. Coinbase fought this, and it went to court, and the Northern District of California essentially sort of carved out a compromise and gave the IRS access to all of Coinbase accounts valued over $20,000 during the time period of 2013 and 2015, so just a 2-year time period. But you can imagine that gave the IRS lots of information that they have used and probably are still using to try to go after people who are essentially cheating their taxes or doing their taxes wrong, whether wittingly or unwittingly, in their activities involving cryptocurrencies. The U.S. has, in 2018, they aligned with a couple other countries, UK, Australia, Canada, and the Netherlands, to create what's called the J5. It's a cross-border enforcement network. So it's the IRS plus the tax bodies from those other countries, and those 5 have begun collaborating on international cryptocurrency tax enforcement. So shows some sophistication in the fact that this is really a borderless economy. And so, they've started information sharing with regard to that. In 2019, the IRS started sending out notice letters to U.S. taxpayers that they had reason to believe had either not filed or filed their taxes incorrectly with respect to cryptocurrency transactions. Those letters have continued up through this year. There have been several waves of them, and there's some speculation that a lot of those letters were a result of some of the information that the IRS gained through its John Doe summons on Coinbase, although unconfirmed, of course. In 2019, so last year, the IRS put out another set of guidance on taxation of certain events, hard forks, and airdrops. So, made clear that in certain situations, there will be taxable events related to when a blockchain forks and you are, all of a sudden the owner of new cryptocurrencies, or if there's an airdrop type event, which were popular, especially in the 2017 and 2018 period. Another piece of guidance that hasn't gotten too much attention, but I think is extremely important, is that in 2019, the IRS updated its voluntary disclosure form. And so this is a form that is used by taxpayers who may have reason to believe that they have, made a mistake on their taxes or failed to file taxes correctly. And, if you voluntarily disclose that information, it's a lot easier to get to a settlement with the IRS. And so the IRS updated that form to specifically include language related to disclosures around cryptocurrency transactions. And so, it's a subtle thing, but that, what that signals to me as an attorney is that, this is the IRS telling, taxpayers, look, we are, going after this industry. We're investigating to find out people who may be not filing their taxes correctly or just simply evading. And we're giving you an opportunity to come forward proactively. And, anytime you do that, you have a much, you're going to be able to settle and come to a resolution with the IRS much more easily. And, we've had clients where we helped to work through tax controversy issues. And ultimately what happens is you settle. You end up figuring out a way to settle with the IRS. Leading into this year, in 2020, the IRS has proposed to update Form 1040, which is the main form that we all use to file our taxes. And the proposed form that's out there, and we'll see it probably in a couple months. Apparently, the very first question, or one of the very first questions on that form, is going to be related to asking the taxpayer whether you've had any virtual currency transactions. And so, really, that couldn't make it more clear. Putting it at the very top of Form 1040. That the IRS is taking this very seriously. I'll also note the IRS has it's public information that they have contracted with and formed partnerships with various blockchain analytics firms. So these are firms that can help the IRS to investigate cryptocurrency transactions on the Bitcoin blockchain and other blockchains. And there have been, in addition to the enforcement that I mentioned with the letters that have been sent out, we also recently, just 2 months ago, had a very high profile enforcement action against John McAfee for tax evasion related to cryptocurrencies. And so, these are some of the ways that government regulators sort of send signals to the market. And, in my opinion, the signal couldn't be clearer that they are very interested in making sure that folks who are involved in cryptocurrency transactions pay their taxes.
Yep, Uncle Sam likes to get paid. I think that's what it boils down to, and it makes sense. I mean, like if you're making money just like a stock, I guess. Actually, Robert, if you can clarify a little bit, like the difference between cryptocurrency, I guess trading and then stock trading, just for the people out there who might be doing both, and why crypto might be getting the attention, but maybe not the stock market as much.
Well, so in general, when you're trading cryptocurrencies or trading in stock, in both situations, you're going to have what's called a conversion event where, if you buy the property at one price and sell it at another price, you're going to have to calculate the difference, and you'll have a gain or loss there. And that will be, that's something that you need to report on your taxes. It's easier to do when you're have an account with a broker dealer buying and selling securities, because that broker dealer is going to issue the right form to you that essentially is going to tell you your gains and losses. They're going to also issue that to the IRS. That's a process that has been in place for a long time, and everyone's very comfortable with it. With cryptocurrencies, it's a growing industry. It's a new industry still, and the IRS and industry together haven't really completely figured out the best way to sort of manage the tax reporting process. So for example, one of the rumors that's out there is that maybe starting next year, the IRS may require cryptocurrency exchanges to issue the same types of forms that broker-dealers issue, where they actually do report to the IRS the gains and losses of their customers. If indeed that happens, and I think it probably will, that I think could potentially make it a lot easier for those of us who are trading in cryptocurrencies, especially through regulated exchanges, to get the taxes right. But currently, not all exchanges are doing that, and all exchanges are kind of doing different things. And so that is part of where the difficulty comes from. It becomes even more difficult if you are running a business like a lot of businesses out there that are commonly now referred to as like cryptocurrency OTC desks or cryptocurrency hedge funds, cryptocurrency trading desks. There are different names for these, but these are just businesses that are in the business of buying and selling cryptocurrencies for their own account, to take advantage of movements in the marketplace. And, if you're not working with sophisticated tool providers and tax professionals, you can lose track of all the data that you need to report to the IRS very quickly. And that's where a lot of the complications can really start to arise.
Got it. Yeah, thank you for that. And Alex, I can imagine that you're dealing with a lot of those, complexities and helping nonprofits navigate them. So can you tell us a little bit, like some of the, when you talk to a new nonprofit for the first time, hey, you guys should start accepting cryptocurrency. What's running through their mind? Like, what are the challenges that they might face? And can you just run through a little bit of the process?
Yeah, sure. So I would say talking to a nonprofit for the first time about crypto is almost like talking to someone if you stop them on the street and ask them about crypto, right? Crypto just isn't mainstream yet, so you still get a lot of, I would say, skepticism and a lot of questions. But at this point, we've kind of heard it all. So as you can imagine, you get a lot of the questions around like, oh, well, I thought this was just for criminals. Or, they bring up Silk Road maybe from, when they saw the headline 5 years ago or whenever. So a lot of these, conversations are around things they may have heard or seen, but, in most cases, they haven't really looked into crypto too much. So we spend a lot of time, educating them on the basics about cryptocurrency, and basically when we talk to them about why they should accept crypto, one of the first things we usually bring up is how much money has been donated in crypto already. Hundreds of millions of dollars have already been donated in crypto in just the last couple of years. And that tends to surprise nonprofits. The other thing that tends to really surprise them is how many people actually use crypto already. I think a lot of people underestimate the size of the market already, not just in terms of people, but also, the dollar value of the whole market. And then a thing they always find really interesting is the actual demographics of those users. So for most nonprofits, they rely on, in most cases, older donors, people who are in their 50s and 60s, and in some cases even writing paper checks still. So for them, it's always been a challenge to connect with younger donors, and accepting crypto donations is one of those ways they can start to activate those younger donors too.
Yeah, that's so important. And right now, I feel like nonprofits are suffering even more than normally with COVID, and people are struggling out there, so might be less likely to donate. But how have you seen the trend of cryptocurrency as a form of donation increasing or decreasing with COVID?
Huge increase, actually. COVID was a major catalyst for our business and kind of the broader industry of crypto donations. Because now more than ever, nonprofits are looking for new ways to diversify their revenue or offset lost revenue. A lot of these nonprofits relied pretty heavily on, physical events, like let's say a charity gala or a walk or bike ride, that raises money, those sorts of in-person physical events. And a lot of them have, just overnight kind of lost, 20, 30%, sometimes even more of their budget, because they can't have those physical events anymore. So they need to find new ways to raise that money. And some of them have turned to crypto, or at least been more receptive to it now.
I love how, they're opening up their, I guess, demographic of potential donors by accepting this new asset. And can you just talk a little bit about the tax implications, or maybe not get too deep into the weeds, but why should somebody donate cryptocurrency? Is there benefit from donating crypto compared to fiat?
Yeah. So the easiest way to explain it is, think about it similar to when people donate stock. So you've probably seen the headlines of people like Jack Dorsey donating $1 billion worth of Square stock. And he's not donating stock for the sake of convenience, right? It's because there's a tax benefit to it. The key thing with donating crypto or stocks or other property assets is that you're essentially donating pre-tax dollars, in the sense that, when you donate, let's say $10,000 worth of Bitcoin, you can donate the full amount and essentially not have to pay capital gains taxes on the appreciated amount. And then you're also getting a tax deduction on the amount you donate, instead of, let's say, selling your Bitcoin, paying either short or long-term capital gains taxes on it, and then donating the after-tax proceeds. And Robert probably can explain it a little more accurately, but that's kind of the high level, I think.
Yeah, that's right. And it's really comes down to, the conversion event that I talked about earlier, where, when you're converting your cryptocurrency into US dollars, that's a taxable event where you have to recognize gain or loss depending on what you purchased the cryptocurrency at. And so, rather than go through that taxable event and then donate your dollars, I think the idea is that you just donate the cryptocurrency outright. So you're skipping over that taxable event. And in that respect, you're able to give more essentially to the nonprofit and your charitable donation.
Yeah. And one important thing to keep in mind too, not only are you not paying tax on that donation amount, but the nonprofits are also by their nature tax exempt. So the nonprofit is able to sell that crypto for the full value, and they don't need to worry about paying tax on it either.
Yep. And this is, after learning about this for the first time, this was actually the catalyst to start the Blockchain Acceleration Foundation, believe it or not. It is, how can people donate crypto to tangibly accelerate crypto, and sort of use this as the beginning part of a sort of ideally in a completely incentive-aligned organization, where you can take that money, if people make a lot of money in the market in short-term or long-term capital gains, to accelerate the industry through education and research and whatnot. So I was curious, Alex, what is the biggest challenges besides the education piece? What about like on the custody side of things? Are these nonprofits taking the crypto and selling the crypto right away? Are they holding it? Are they, how are they actually managing the crypto?
Yeah. Yeah, so we have a feature we offer all of our clients that would allow them to automatically convert the crypto to US dollars when it comes in. As you can imagine, most of our clients opt for that feature because it's not really their job to watch the crypto markets and decide when to sell or anything like that. And it's the same way they handle stock donations. We're lucky to have a really great partnership with Gemini, the cryptocurrency exchange, who helps us, kind of handle all the back-end exchange services in that regard.
That's great. And Robert, kind of passing on to you regarding like the law of custody. Like this is a big issue for a lot of companies, especially early stage crypto startups. Can you just explain to the audience a little bit about the law around holding money for others, and the risks that are involved in that?
Yeah, happy to do that. So, Alex talked about how he has a partnership with the exchange Gemini to help manage the donations. And one reason why that's important is that when you're moving money, and we talked about how cryptocurrency is defined as property by the IRS, but interestingly, FinCEN, the Financial Crimes Enforcement Network, which enforces the U.S. Bank Secrecy Act, the anti-money laundering laws, FinCEN defines cryptocurrencies as, quote, money. So when you're in the business of moving money on behalf of another person from from one person or location to another person or location as a business venture in particular, and in other circumstances, you are generally going to be deemed to be a money transmitter by FinCEN. And if you're a money transmitter, you have to have an anti-money laundering program, which is a quite complex undertaking involving things like knowing who you're doing business with, having certain know your customer procedures, as well as monitoring for suspicious transactions, filing SARs, having all kinds of policies and procedures. And it can get quite complicated and quite costly, actually. And so, that's why when you are in this industry and you are in a business where you are custodying, moving, transferring cryptocurrency, especially on behalf of others, it is critical to gain an understanding of whether or not you're going to be deemed a money transmitter, because if you are, there are all sorts of compliance requirements that kick in, and these are very serious requirements related to anti-money laundering. And so the violations can, for violating these regulations is a very serious thing. So you want to be really careful to make sure you're complying. And in general, FinCEN has put out a lot of guidance on this topic. It still is quite complex, but the most recent guidance that came out from FinCEN in 2019 really does a great job of giving an overview of a lot of the different models that are out there in the cryptocurrency industry. And so, you mentioned custody, Cameron. So, if you're hosting wallets on behalf of other people, you are generally going to be considered a money transmitter, and you have to have an anti-money laundering program. So that's just one example of how the custody issue fits in. And it's an evolving issue. The Office of the Comptroller of the Currency recently put out guidance explaining that banks can now be cryptocurrency custodians pursuant to their banking licenses, for example. And so I expect that, in the years to come, we're going to see a lot more custody solutions that are going to make things a lot easier for people as, more businesses and even mainstream businesses like traditional banks can now start to offer some of these services and make things easier for the rest of the market.
That's great. A concern of mine, we accept cryptocurrency-based donations, and I want to be very careful sometimes with who we allocate donations to. And that is actually sort of to Alex, how do the nonprofits actually ensure when they're allocating a tax deduction, they're not allocating one to a criminal? Because I guess what sort of, standards or prerequisites are there to ensure that, you're allocating deductions to people who are not criminals?
Yeah, the biggest thing is the donor, in order to get the deduction, has to declare it on their tax return. So they're, in a sense, having to report it to the IRS, at least in the U.S. So they'd be identifying themselves that way. So of course, if it's a known criminal, that's going to be an automatic flag. And sort of on the blockchain analytics side, there's a lot going on in the background with companies like Chain Analysis that you mentioned, monitoring all the incoming transactions, make sure nothing's coming from a blacklisted address that's on the FinCEN list, things like that. They're collecting donor information, all that sort of stuff that they do for non-crypto transactions as well.
Got it. Yeah, that's something that we're very, very wary about, because the crypto space is full of bad actors, unfortunately, and we got to be extra diligent. And actually, Robert, I kind of wanted to pass it on to you a little bit and talk about the travel rule, because we were talking about this global, cooperation to ensure that these laws are being met. Can you talk a little bit more about the travel rule and sort of some of the progress being made to ensure that these money's not flowing in the wrong hands? And I believe you're muted.
Sure. So the travel rule is a rule issued under the FinCEN regulations that I was talking about just a moment ago. And it basically says that financial institutions, and financial institutions is a defined term under the regulations that includes things like cryptocurrency exchanges. When they are moving money on behalf of others, they have to keep a record of who that money is coming from, where it's going to, as well as other information about the transaction. If I remember correctly, I think the threshold right now currently is $3,000. So anytime it's a transaction, $3,000 or more, you have to record and keep records of certain information about the sender and recipient of the funds. And this is something that banks have been doing for a long time. The rule was created for the banking industry. And it's actually a rule that is currently under consideration by FinCEN to lower the threshold. So the threshold could potentially be lowered to, I think, something like $245 or something, some very low amount like that. And so, if indeed that happens, then, the travel rule is going to become even more important for businesses, especially those considered financial institutions, to understand and have, systems to help them comply with. As of certainly by about summer 2019, it became very clear that FinCEN and the international anti-money laundering community, through a body called FATF, the Financial Action Task Force, decided and sort of really made it crystal clear to the industry that the travel rule applies to cryptocurrency exchanges, or what FATF calls VASPs, virtual asset service providers. So that could be inclusive of things more than just an exchange. So, businesses that are essentially handling cryptocurrency and moving it on behalf of others. And so there's an ongoing initiative right now in the cryptocurrency industry to figure out how do we build systems to help us comply with the travel rule. In the traditional banking sector, banks have had systems to comply with the travel rule that have been in place for decades now, and those systems just can't be easily transferred to the cryptocurrency industry. It's a whole new asset class, whole new way of transferring value, whole new systems that are used to store, manage, and transfer cryptocurrencies. And so the industry is, it's kind of one of the current struggles that the industry is going through right now. How do we as an industry design systems that will enable compliance with the rule? As of now, at least in my opinion, there really is no, there is no method to reliably comply with the travel rule for the cryptocurrency exchange industry. It's something that the industry is aware of, and there are, I think, at least 3 or 4 different initiatives, in partnership with different exchanges that are currently working on and building systems for compliance. I forget the name of the one, but there was one that published a very detailed paper on the status of their initiative, maybe about 2 months ago or so. And so, the industry is getting there, and they're working on it, but it is, it's definitely an area of concern from an AML compliance standpoint. And, it's anybody's guess as to how long FinCEN is going to give the industry to reach substantial compliance before they start bringing enforcement actions. So, that's a little bit about the travel rule and how it's affecting the crypto industry.
Yeah, I know a lot of blockchain developers, and a lot of them like to remain anonymous. And so I see this, growing trend of people wanting to sort of, I guess, maintain their anonymity to protect themselves against, some of these regulations, just because of the permissionless nature of the space, or they're moving abroad. So I'm really curious to see how the government is going to react to, I guess, very permissionless exchanges, and like decentralized exchanges are already becoming more popular. I feel like this is only going to accelerate that, and I don't know how they're going to regulate it. I mean, there are some, like, for example, Uniswap. We know, like, Hayden Adams' name. Like, the fact that we know his name means that he's not completely anonymous. So I'm seeing a trend in this industry where everything will eventually become more and more anonymous or have to comply. So how is, like, the IRS, I guess, approaching the world of decentralized finance?
I'll jump in and start and let Alex provide any other comments. But, let me first touch on FinCEN's perspective, because a lot of what you just mentioned really implicates the FinCEN regulations. And I just want to be clear for like those in the audience who are working in the industry, the key question you need to ask yourself is my business a money transmitter? Is my business a money services business? Because if the answer is yes, that's when all of these AML compliance requirements kick in. If the answer is no, then you are what's called just a user under the FinCEN regulations. And in general, users do not have these hefty AML compliance obligations. So that really is the first question that you need to answer for yourselves. In terms of some of these new applications in the DeFi space, where certain types of financial transactions, and they're becoming increasingly complex, can be performed in an automated fashion through smart contracts or other decentralized techniques. We don't have any crystal clear guidance right now on how the law is going to look at that type of automated activity. However, there is certain guidance, particularly from the CFTC as well as from some SEC enforcement actions, that give us a little bit of clues to how regulators might look at this stuff, if and when, and really probably just a question of when they start looking at it closely. And some of what I've seen in my work is points to the idea that the programmer of a smart contract in certain situations may essentially be deemed to be the person that is behind the transactions that smart contract is effectuating. And it's a generalized statement. There are different strategies that I think can be used to sort of mitigate risks related to that. But in general, anytime you're programming a smart contract to do something, especially when it's moving money and engaging in financial transactions, I think it's important to ask yourself, if I were deemed to be the person, me, the programmer of the smart contract, if I were looked at as the one effectuating these transactions, how does the law look at that? How do the FinCEN regulations look at that? How do the CFTC regs look at that? How do the SEC regs look at that? And then, of course, how does the IRS look at that? And from the IRS standpoint, they're going to be looking at are people paying their taxes? When especially when you've got a business that is engaged in high value transactions, transactions that when you look at the blockchain using a tool like Chainalysis or Elliptic or the other tools, start to really stick out. Those are the ones that are definitely going to catch the IRS's attention first. So especially those who are experimenting. If you're running a pilot, that's one thing. But once that pilot gets to the point where it starts maturing into a real business, something that is really could be considered real business activity, or especially where you're getting to the point where there are significant profits, going to those who are engaged in that activity. That's when you've got to really understand your tax implications and make sure that you file your taxes on time. And if you haven't filed your taxes on time, that's when you can, get to the point where you can do a voluntary disclosure and sort of get right with the IRS. So, it's not just one or the other. You're either filing your taxes or you didn't. There are many situations where maybe you, as a developer, maybe got it wrong or missed or overlooked certain things. And there are avenues where you can sort of voluntarily disclose and get right with the IRS. And so that's part of the advice that I like to give those that are working in this space.
Cool. Well, thank you for that. And Alex, on your end, with the rise of DeFi, and people have a lot of short-term capital gains to pay because people are moving money from liquidity pool to liquidity pool, do you see this as any sort of signal to a potential increase in donations in cryptocurrency to nonprofits? Do you think DeFi traders are a target market for nonprofits to engage with?
Not the traders so much, but I think there's some interesting applications of kind of charitable DeFi applications. where you're seeing interest in having, let's say X percentage of, coins go to a charitable cause, things like that. There's a lot of interest. We're starting to, I wouldn't say a lot, maybe that's exaggerating, but we're starting to see some interest from nonprofits wanting to earn yield on their cryptocurrency or their stable coins. I wouldn't quite recommend that a nonprofit starts using, some of these DeFi platforms quite yet. I think it's a little early for that, but I think, longer term, there's going to be some interest there, especially if we see inflation starting to pick up.
I think that's so cool. Yeah, like coding it within the entire system. And like, this is how I think, the Zcash Foundation, I mean, all these blockchain systems need to pay for fees into supporting the network. So kind of, we've talked about this in previous meetups, but the decentralized management of public goods, there needs to be a source of funding to fund the public goods to begin with, and how that is all governed and whatnot is I think absolutely fascinating to me. But I was curious if you have come across any nonprofits potentially interested in like any sort of decentralized governance approach, like the whole DAO model, maybe digitizing identities or maybe their member base in order to somehow, I know it's very sort of far out there. We're experimenting with some of this internally, but again, we are the Blockchain Acceleration Foundation, so we might be one of the first. But if you've come across any other nonprofits like trying to decentralize, I'd love to hear a little more about that.
Not really in terms of the governance model for any of our nonprofits, but I would say when they're looking to actually use cryptocurrency, beyond donations, it's usually in the context of doing cash transfers. So using stable coins is a more efficient way to distribute aid, in some cases even directly to the end users. So definitely seeing interest in that regard at least. But for most nonprofits, accepting crypto is kind of a big step for them, and they're not rushing to do too much more beyond that yet, at least. I think these other cool use cases are going to come. It's just going to take some time for them to get comfortable with crypto in general.
Got it.
Let me just say, I really, one of the things that I love about what Alex is doing and the topic that we're talking about tonight is that, I think with things like stable coins and with things like blockchain analytics, becoming more mature, I think there's a real opportunity to really improve charitable donations and to really improve aid distribution programs. By leveraging, the unique aspects of blockchain, specifically the ability to get money from point A to point B across the globe very seamlessly, combined with the analytics and the ability to track and trace the transactions to make sure the money is going where it's supposed to be going. And I think that's the real opportunity that I think the nonprofit sector is going to see itself having, over the next 3 to 5 years as the industry matures. So that's something that's really exciting to me. I think it's great.
That was actually leading directly to my next question for Alex is do you see any nonprofits sort of accepting cryptocurrency to increase transparency around spending? Now, I understand that you can't go buy, spend cryptocurrency on the programs of the nonprofits today, but because that idea I've heard is floated around in many niches, but is that something that you've come across?
Yeah, but kind of like you alluded to, the biggest barrier right now is the lack of places that they can actually use that crypto. So, if they could use that crypto to, I don't know, let's say pay their employees or pay other vendors or pay for research and those types of things, I think they'd be willing to do it. But right now they don't have a whole lot of options. So for them, the most efficient way to use the money is to convert it to US dollars and use it like they normally would. But there's definitely an interest among nonprofits in being more transparent. And I think in general, I think nonprofits are actually more transparent than a lot of people realize. Their financials every year are posted publicly, where you can see how much money they brought in, how much money they spent on X, Y, and Z, and how much money was left in the bank after that. And one other thing kind of related to that is, some people who I think are less familiar with the nonprofit sector in general tend to criticize nonprofits for spending money, basically, right? They say, I want 100% of my donation to go to the cause. But unfortunately, that's not really realistic in most scenarios. because you have to have staff, you have to have expenses. There's naturally going to be overhead, and there's always going to be them trying to invest in more innovative ways to deliver that aid or do better research. So I would just caution people from pushing for, let's say 100% of their donation going to, directly to someone on the other side of the world, because that's just not necessarily realistic.
Yeah, snaps to that. That is literally my life right now, is especially in a program like in a nonprofit like BAF. Our programs are, it's labor. We build courses. You have to, people have to actually do that, and it costs money. Well, right now we're doing it for free. But if we want to scale this, we need the right donors involved. So thank you for that. And actually, Alex, I'd love for you to tell the community a little bit more about, Giving Tuesday and what's going on right now in the world of nonprofits. December is a very active month for nonprofits. So if you just, talk a little bit more about that, that'd be great.
Yeah, sure. So December is easily the biggest month of the year for donations, not just crypto donations, but donations more broadly. Giving Tuesday, which was just this Tuesday, is the biggest day of giving every year. It started off as sort of a day of giving in the U.S. and has really grown to a global movement now all around the world, where hundreds of millions of dollars are donated in that single day. And it's really sort of the kickoff of a month-long, season of giving. For crypto giving and other property giving, it tends to be particularly popular because people want to get those donations in before the year end and before this tax year ends. So even in the last couple of days of the year, you'll see a lot of last-minute donors trying to get those donations in before the first of the year. You'll probably see plenty of ads on Twitter and other social media encouraging you to give. So whether it's crypto or something else, make sure you support your favorite cause before the end of the year.
That's great. And just to remind the audience, if you have any questions, feel free to leave them in the Q&A chat, or even just type them directly in the chat below. Yeah, I totally agree. We're about to launch our fundraising kind of campaign. We create a bunch of swag. Everyone will be dropping some merchandise for all of our active members out there. I'm super excited to, just to engage the community, really. So I guess if there's no questions, we're going to wrap up pretty soon. There are questions. Wow. Okay. Let me read the first one. Do you feel the U.S. are behind in terms of regulation compared to other countries? I guess this question is for Robert. This is the most voted question. I'll reread it. Do you feel the U.S. are behind in terms of regulations compared to other countries? If so, by how much? Are we more regulated or regulated worse? The state of blockchain and crypto regulation and comparison to other countries.
I'll answer it as best I can. It's a tough question. I think we could have a whole conversation just on that, and people obviously will have different opinions. I think, look, the U.S. capital markets and financial system is the most mature in the world, and there are a lot of benefits that come from that. And I think sometimes maybe we take those for granted, having systems that prevent fraud, prevent corruption, and we all sort of benefit from that level of sort of transparency in the markets. And so I think that's the first thing that comes to mind when I think about the state of regulating cryptocurrencies in the U.S. is that when you put yourself in the shoes of the regulators, that's all they're really trying to do. They're trying to enforce these laws and regulations that are in place to protect the integrity of the U.S. economy at the end of the day. And that's something that we all benefit from. So, from that perspective, I think, there have been a lot of people who have criticized U.S. regulators saying maybe they're too heavy-handed or too slow to change or adapt regulations. But what I'll say is that, these regulations are there for a reason. They're there to protect us as citizens and consumers in the U.S. economy. And it's never really going to be easy, unfortunately. Think about like the tax code. It's the most it's the most complex body of one of the most complex bodies of regulations on the planet. Sure, maybe it could be some more simplified, but there's no easy way to do it, unfortunately, at the end of the day. And so you have to rely on professionals to sort of help you navigate these. And so, I would certainly encourage, folks to, do their own research on the state of U.S. regulation, especially as it relates to the activities you're involved in or thinking about being involved in, but also, reach out and make contact with the right professionals, attorneys, accountants, and other advisors to help you, because that's, whether it's cryptocurrency or any other industry in the U.S., you need professionals to help you, because it's just never going to be easy when you're dealing with highly regulated activities and money, things like securities, things like commodities. These are some of the most highly regulated things on the planet. Money is arguably the most highly regulated thing on the entire planet. And so, long way of saying, yes, I certainly agree that the state of U.S. regulation in the crypto industry is complex. But unfortunately, I think, it's always going to be complex. And so, as an attorney representing my clients, my goal is to sort of understand the client's needs, understand sort of the status of regulations. In a lot of situations, there's going to be a lot of gray area. And, part of my job is to come up with creative solutions and communicate those solutions effectively to the regulators, to help clients get to where they need to be in terms of their business models. And so, I really encourage folks to sort of have that advisors that can help you sort of communicate effectively and understand and navigate the regulations effectively, because unfortunately they're just not going away. So, I think, there is sort of this anarchist, tinge to the crypto industry, and there are a lot of things that I think are healthy about that. But at the other end of the spectrum, especially when you're dealing with things like money, you're never going to really find yourself in an area where you're not regulated. So it's interesting and important, very important to understand, the regs that you're running up against. I don't know if that answers the question, but those are some thoughts.
Yeah. And Alex, question for you. Do you ever talk about staking with any of the nonprofits? I know it's very sort of out there in, crypto world, but I guess staking could be a good revenue stream that's consistent and whatnot. But yeah, it's a question for you.
I don't think a nonprofit has ever brought it up with me. At least not yet.
Maybe one day. Yep. Cool. So actually, one last question for Robert. I think this one's extra interesting around the IRS and what they're planning to do about privacy-preserving technology, because now we have these cryptographic protocols that are almost impossible to break, and I guess Chainalysis can't really break, from what I've read, can't really break them, or any of the other ones. So is there any guidance or anything regarding privacy-preserving tech and the IRS?
It's a fascinating concept. I mean, there really is, so part of the work I do is I do a lot of work in the privacy area. So, data privacy and security, stuff like that. And I've done, work in the privacy area as it relates to blockchain solutions, things like self-sovereign identity, and also sort of cryptocurrency transactions. And, there's a tension, there's a tension between, the need to be able to monitor transactions to prevent criminals from using our financial system and to prevent tax evasion on the one hand, and then on the other hand to protect individual privacy. Will cash ever go away? I would argue probably not, and certainly not for a long time. In the U.S. where we value our privacy, and that's part of the reason why people like cash. At the same time, of course, that's why criminals like cash. And so that, that's part of the tension. And I think that same tension with cash is really playing out in the cryptocurrency sphere, where you have, there's a lot of analogies to, cryptocurrency transactions, especially through privately held wallets, are, while they are traceable on the blockchain, they are can be in a lot of situations very hard to identify who's behind those transactions. Is that a good thing or is it a bad thing? Depends on the nature of the transaction and the purpose. It's obviously a bad thing if you are a terrorist financer. It's a good thing if you are looking to protect your privacy in a legitimate way. And so some of these same concepts apply to things like VPNs and other sort of data privacy preserving technologies, and touch upon new laws like the California Consumer Privacy Act, which is intended to help people take back control of some of the privacy they've lost in the internet age. And so all these issues are interconnected, and I think that over the next decade, I think I encourage folks who are interested to learn about sort of the intersection between privacy laws, anti-money laundering laws, tax laws, cryptocurrencies, and sort of personal data, as all that stuff is now transferred and managed over the internet more and more. Because frankly, we're going to have to come up with new solutions to adequately protect data privacy and protect legitimate privacy, while at the same time protecting ourselves and our society from threat actors, terrorist financiers, money launderers, tax evaders, stuff like that. So,
thank you. Yeah, it's awesome answer. And Alex, one last question: why should people donate cryptocurrency to nonprofits? I know we've already been through this, but love to hear it again.
Yeah. So if you already own crypto, it's in most cases, well, assuming it's appreciated, in most cases, it's probably a more tax efficient way to donate. But of course, always talk to your accountant and tax advisor first before making a decision. And the other piece that's not tax related is really about crypto adoption. So, even if, maybe you don't have a huge tax savings from donating crypto, the more crypto that gets donated, the more nonprofits are going to accept crypto. And in return, the more the nonprofits are also going to talk about crypto to their audiences. So there's a huge adoption angle to it too. As you can imagine, nonprofits have pretty big followings and a pretty big audience. So getting them talking about crypto is a great way to introduce it to people in a much more positive light than maybe they're used to hearing about it for the first time. So I'd say those two reasons are the main ones.
And with that said, I'm dropping 2 links in the chat. The first one is to become a member of BAF. It's completely free. We will help try to get you a job in the space. We will continue, pushing education your way. We're building projects now. It's a very exciting time to get involved. It's, as I said, completely free. And then the second one is donate to BAF. We've been doing this for the last 2 years, 100% for free. And now I think is the time in which we need to fulfill operating budget, get people paid, and make sure that this org can grow and live on. So I want to thank both of you. Actually, Robert, do you have any final remarks? A place where someone can follow you on Twitter, or any resources that you'd like to share with people?
The chat posted a link to the weekly Blockchain Monitor blog that I curate and edit and write for at my firm. It's a weekly blog. I personally select all the content that goes into it, personally edit all the blogs. We post it on LinkedIn every Friday. We send it out to our email subscriber list every Saturday morning. And what I try to do in that blog is I try to cut through the noise. I like to say that 90% of this industry is noise, but if you can cut through that 90%, the remaining 10% is very valuable. And so what I try to do in that blog is give you the 10% straight and simple of the key updates in the industry that you really need to know about. And we try to do it in a way where we are sort of telling the story of how the market is developing, how the regulations are developing, and we give links to the source documents, stuff like that. We also post periodic, more lengthy, more legalistic pieces where we get into some of the details of some of these complex regulations. And so if you want to know what I'm thinking about, what I'm paying attention to, it's all in that blog. You can go to the link and you can subscribe on the left side of the landing page. And you'll also find my email address there. And so anyone who ever encounters legal issues or wants to just talk about the market or just sort of get introduced, feel free to get in touch.
Awesome. Thank you, Alex. Any last words?
No, thanks for having me on. I dropped a link to my Twitter profile. That's where you can find me and keep up about the latest about crypto donations.
Oh, I have a last word for you. They're hiring a software engineer. So if anyone is looking for a software engineering job, contact me. I'll introduce you to Alex, or just contact Alex directly. Yeah, I want to get this role filled because what he's doing is awesome, and they have a really great team. So
Awesome.
let's make that happen. Awesome, guys. We'll see you networking. Thank you again, Robert. Thank you again, Alex. And hope to see you around.
All right. Thanks, everyone.
Bye.
Bye.